Wall Street in for another brutal day. Futures following European markets lower as Greece is close to running out of cash, and French banks brace for a downgrade from Moody's. G7 leaders delivered no plans over the weekend to help save world economies, and Germany is reportedly preparing contingency plans in case of a Greece default. Lots of rumors swirling of Germany or Greece possibly even leaving the euro. In the U.S., President Obama sends his job plan to Congress, and Microsoft, Juniper, and Cisco all prepare for analyst meetings and developer conferences this week. Get ready to trade the carnage here. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Happy Monday, everybody. Scott, so great to see you back. We missed you here. Let's get to the markets, though. I want to get your take. So markets look to be heading for another lower open after getting pummeled Friday and Thursday. But there's two camps, right? We were talking before we got on camera that on the one hand, Greece didn't default. That's pretty awesome. And the stocks had two really tough days, so you would think there'd be some kind of bargain buying. But on the other hand, you have a really strong dollar, you have gold prices still high, and you have 10-year yields continuing to fall. Which camp do you fall on?
Well, basically the market's telling you they're just putting off the inevitable for now. I would have thought on Sunday, I was watching the football games, I'm like, no terrorist attack, no Greece default. Maybe the market opens up with a little bit of a relief rally, and then we'll get to see how weak we are, because if we open up and fail, that tells me that this lower wedge or bear flag that we've been putting in place for 6 weeks can be broken to the downside and actually give me a shorting opportunity. But today I woke up, futures are down 18 handles. I'm like, wow, we're opening below this key level that I'm going to show you. And now you have to be really quick and really nimble here. So take a quick look at the charts. If you look here at I'll show you the SPX first. This was that head and shoulders pattern that we talked about. Here was your get out of town quick. This was the trigger point around 12.55. Imagine that. You could have sold here prudently before this whole disaster to the downside. And now for the past 6 weeks, we've been developing a small little ascending channel where we've been making higher lows and also, testing some resistance where we had one quick push up to this lower area here. But now we're at a point that's very, very crucial, a point where if we start to get below this low here of about 1140 to 1148 and stay below it, we could see a retest of this area very quickly. And then after this, I'm going to show you the weekly chart of where we can go.
All right, so then you mentioned a possible shorting opportunity when you were looking at the markets yesterday, but today, now where does that leave you?
Well, I'm coming in flat. I didn't like the action late last week. I tried to, once we went in that fledgling rally, to get a little bit of a portfolio approach, 6 to 8 stocks, but I didn't like the way we were trading, especially how we penetrated below that 1160, late last week. So today I'm flat. I'm going to come in, I'm going to test the longs. What I'm going to do is I'm going to wait for like a 15 to 30 minute low, in the spiders and buy versus that low because we just had a 3-day move lower, and there's a small chance this lower area holds. And I'm going to look at high beta tech, which typically once it shows some strength, when the futures go lower and they don't go down, maybe they're buyable. I'll look at Apple, I'll look at Baidu, I'll look at Amazon. And if they don't bounce, though, with the futures bouncing, that can give us clues that this ascending channel could break to the downside. And if you look right here, back at this ascending channel, you will see on the weekly, if we break below this area, the next big support area that I'm going to be looking at is last year's low around, I would say, 1010 to 1040. This is where we can go if this were to break to the downside. So, got to be careful here.
Right, I was asking before, have we seen the lows for the year? And you said maybe not the lows, but we've definitely seen the high for the year. True?
True. I definitely think we've seen the high for the year. I would say that barring a miracle, maybe we can get back to 1275, 1300. Fourth quarter markets move quick. But I would say about 2 weeks ago, I'd say 50% chance that we've seen the lows. Now I'd say about a 20% chance we've seen the lows. So if you're in a macro tier 1 long, you better know that we could break below it and be prepared to buy more if we get to that level. Or if you're looking for a short, it could be quick. So it all depends on your time frame right now.